CPI data came out higher than expected. Expected was 3.6 and we came out at 3.7, and the markets have already slightly reacted to that. And we have to talk about today why that is really bad in the mid to long term for all risk on assets, and specifically Bitcoin and the crypto market and in its entirety. And if you think that is interesting, you should definitely stick around here. Make sure that you're subscribed to the channel, liking this video, and also activating the bell so that you will never miss out on these important updates. And of course, we are going to talk about where Bitcoin is going in the near term, and also a potential new trade setup that I want to show you guys. So now let's get directly into today's content here. So as you can see here on the economic news release on the consumer price index, there you can see for August it came in at 3.7, expected was 3.6, and that's why the markets, since they're open now for almost 1.5 hours, they have started to sell off a little bit, but not as much as they did in the past, which is also a good sign that they are not caring so much anymore about these numbers coming out. So when we're going then to the Fed watch tool, here's something that I want to show you, and that is that for the next Fed meeting, where they are deciding if they're gonna hike rates again to fight inflation, there's a 97% chance that they are not hiking rates for this month. But here comes now really the really dangerous part for us. By November, it's almost 50-50. Yeah, no, it actually increased since I looked earlier. So 61% no rate hike, 37.9% a 25 to 50 points hike, and only 1% for a higher rate hike than that. So, and if they're not hiking in November, then to 100% they're going to hike in December. And here, this has dramatically changed since the hike of today in the CPI data report. That was before at 0, like we will not get a rate hike, and now it's at 54% that we stay where we are, and 40% for a rate hike. So, and if we are not getting in November one, the whole percentage that is betting on a hike will move into December, and most likely we're going to get then in December a really crazy rate hike, because that is also what the Fed said, that they are planning for at least 1 or 2 more rate hikes for this year to fight inflation. And that will be, of course, really bad if we get this, because the markets have always sold off once we got a rate hike, and especially if it was higher than expected. So that's why we have to be really cautious here with these numbers coming out, especially when it comes here to the rate hikes. So now when we're looking here at the DXY is surprisingly not pumping in regards to these numbers. So I would have expected that the DXY would be pumping to the upside. This is not the case. We are just here still around that support. We are also running soon into this upward sloping support line, so which I hope we're going to break at the same moment where we break the underlying support level. I don't want to see the DXY going sideways out of it. I would like to see a break to the downside where we break both levels, because that will be way more powerful for a further continuation to the downside. So then when we're looking at Bitcoin, is right now retracing. When I looked earlier, Bitcoin was still having a green candle. There you see there's like a $15 spread between having a bullish and a bearish candle. So overall, this candle is not bullish to me. It's a doji candle, and most likely in 1 hour, when the next 4-hourly candle comes out, the next one will trend to the downside, especially if we close that candle in red that we are having here right now. We are still range bound. Also, there has nothing changed. And I believe that we will still come back and fill here this imbalance to the downside at $25,200. And that's why my next trade will be really easy. I'm going to show you that in a second from where we are taking a position. First of all, I still want to point out that the bullish divergence is technically still intact. Nothing has changed there, but the price needs to be pushed above $26,400 to see a continuation to the upside. For now, we are facing resistance at that level. We got multiple times now rejected here, 3 times in total. And yeah, if we are not breaking above that, then most likely we're going to see a failed move with a rejection to the downside here. The RSI is already trying to roll over. That's not a good sign. So we have to be cautious here. And when we are looking at the heat map, I was thinking, why did this reload? I had no electricity when the workers in my office were working, and they were drilling some holes and turned off the electricity. And that's why I did not have everything perfectly here up and running. On the heat map, nothing has really changed when I look at it from yesterday. So what I see is that a lot of the orders that were previously above us, they either got bought up or they vanished. So they got canceled. And they did not come back yet. So you don't see a really strong buying cluster or selling cluster here anymore for the time being, which is good because it makes it easier for the price to go higher. But on the other hand, when the price goes up and it would go through these levels, it will be also really easy to turn the price around again when the order book is really thin. That it makes it easy to push the price in either direction. So now when it comes here to our block, there also nothing has changed. We actually pumped out of that block. We got here now a golden cross, but in my opinion, it's a really weak one. It doesn't look really promising. I'm gonna tell you that straight away, that this doesn't look promising because of the angle that we are getting this cross. And that's why I believe that we're going to roll over here, come back into it and break lower. Also here on this AA indicator that I'm using, when you get candles like this, so look at here. So we got here also some green candles that moved like sideways, like here, and then we actually went down, and that is what I also expect to be happening. And guys, for the trade that I'm going to show you, don't forget, if you want to trade with me together, do this on BYBIT. You still get $30,000 absolutely for free if you use this specific link here, and only with that link. That is my favorite exchange. And if you don't know how to trade, then sign up for my course. I have a discount right now going on. You have only to watch not the last live stream, the challenge. Watch the live stream challenge. There you find how to get a discount for my course and take advantage of that. So now when we're talking about the trade that I'm going to take, it's really easy. So I expect Bitcoin still to go up here to $26,800. And a lot of people will get caught here right-handed and think when we get above $26,400 that we are pumping now here like crazy to the upside, especially when we go slightly above 26,800. But in my opinion, this will be not the case. We're going to run into resistance here, and I'm going to short this from here back into this block here to $25,200. That is the next trade that I'm going to take here. And when I take here the short tool, then I would set my stop loss kind of here. So then you see that is almost an 8% move to the downside, almost a 1-to-5 risk to reward ratio. So that is a really, really good trade. And here you have everything. So the entry is at 26,877. The stop loss is at 27,332, and the take profit is at, yeah, okay, in that case at $24,800 ish. I want to adjust that to make it correctly. So this, and then let's go up here to 200, more or less. Okay, so it's a 1-to-3 risk to reward ratio. Still absolutely fine. 6%, 25x leverage, 150% profit that we can bank here really, really easy. And I want to mention here once again, guys, also the death cross that is looming here by today, it will be solidified, and it looks like that we are following the fractal that I mentioned to you guys. We pumped it to the upside, so here's a little bit continuation, still missing in my opinion, to get the rejection back to the downside, and yeah, then we are heading lower, and then we should get later on in October the final moment where we then start pushing back to the upside. Guys, that's it already for today's episode. I hope you enjoyed it. Please make sure, smash up the like button, hit the subscribe button, hit the notification bell, and I'll see you then again tomorrow.